Good morning and good afternoon, everyone. Welcome to the webinar titled Composable Banking, What It Means for the Banking Industry, presented by Newgen Software, a leading provider of a unified digital transformation platform with native process automation, content services, and communication management capabilities. I am Gunjan Kalita, and I shall be your host and the moderator for this webinar. Let me introduce our speakers today. First up, we have Martin Bailey, Director of Innovation and Ecosystem at Temenos. Martin is joined by Hemal Jaisinghe, Chief Business Officer, UK, Ireland, Central and Eastern Europe region at LTI Mindtree Syncordis. We also have Varun Ghai, AVP and Head of Business Consulting, UKI in Europe for Newgen. At the end of the presentation, we'll be open to any questions you might have. We request you to type your questions in the question window of your GoToWebinar interface anytime throughout the webinar. Our experts would get back to them once the webinar is over. Today's topic, composable banking, is slowly gaining traction within the banking community, and for good reasons. While banks are trying hard to meet customer expectations, most of them are caught back with legacy core banking platforms, preventing them from accelerating their pace of transformation. The plug-and-play nature of composable banking architecture takes away this burden, allowing banks to add or swap components through API in the area where it's needed the most. It brings immense flexibility to innovate and accommodate current and future requirements to help banks stay ahead in the game. Still wondering what exactly is composable banking and what it means for banks and FIs? Well, let our speakers today answer that for you. And with that, I hand it over to Martin to take us ahead.
It's nice to be here. Thanks for the intro. Firstly, just a little bit about Temenos. So Temenos are a banking software company. We've got 3,000 banks around the world that use our software to run the bank. So we're going to talk today about composable banking. So what is composable banking? So really it's the ability to assemble the banking capabilities and the non-banking capabilities that you require into the perfect solution for your financial institution. And if we think about why composable banking has come about, I think it's really due to a couple of things that have happened in the industry. Firstly, it's not just banks that offer banking. So there's all kinds of different organizations that now offer financial services. So the software that's needed for those institutions is very, very different. And secondly, the advent of cloud and SaaS-based banking means that resources matter. So, banks don't, or financial companies do not want to deploy any more than they have to make their solution work. And they also want to be able to independently scale and that kind of thing. And that's why, composable banking has come about. You really need to be able to assemble the building blocks that you need for your solution and get going as quickly as possible.
Thank you, Martin. And in a crisp note, that actually talks about what exactly composable banking is and how Temenos is aiding that. And Hemal, what about you? What are your views on how LTI Syncordis, Mindtree Syncordis is helping this?
Yeah, let me first introduce LTI Mindtree Syncordis. Syncordis is the banking transformation practice of LTI Mindtree. LTI Mindtree is a global technology consulting company. As Syncordis, we are the banking transformation practice of that. LTI Mindtree is a 90,000 employee, 3.5 billion company, a global IT consulting conglomerate. In composable banking, Gunjan, if you really look at what it is, composable banking is where previously there was a lot of push towards software vendors to come fully integrated, fully packaged solutions to the market. Everything has pros and cons of it. Clearly, integrated banking solutions has its pros and cons, but we see lately a lot of customer interest towards composable banking, which is more microservices based, small pieces of the jigsaw puzzle that can be easily integrated. And that also has given a lot of gravity from the fintechs that comes to the market, because there's a lot of capabilities that can be easily integrated. As a result, it provides greater flexibility and agility to integrate and innovate to the banks. At the same time, it increases a much better customer experience because you can have specialized bits and pieces put together. Most importantly for the customers, it reduces cost and time to market. I speak to a lot of customers around the world as I meet with them on relationship perspective. What I see is composable banking provides improved flexibility. It provides greater flexibility because it's more microservices, small pieces put together than one big elephant in the room. But what is also the challenge, Gunjan, is as I see is customers also on the other side don't want to lose the flexibility of having one supplier compared to multiple suppliers. If you put 20 different microservices from 20 different suppliers, from one side you're trying to create flexibility, but on the other side you lose the flexibility. And you lose your agility to time to market because then you have to get multiple suppliers to agree to a small change. This is where we work very closely as our principal partner with Temenos, where Temenos as a one supplier provide core banking with previously modular based, now composable based. It provides all capabilities, but on a microservices basis. So you don't lose the flexibility of having to deal with multiple suppliers. Still, it's fully seamlessly working together, even though it's a composable banking solution. So we, as LTI Mindtree, is an organization where we put this together. Even in the areas where document management, authentication, and the solutions where it has to come from fintech and the partners, we are able to, as a one supplier, pull all these things together, system integrate it, put the solution together, implement it, and hand over to the customers. This is where, from LTI Mindtree perspective, we enable the client to not lose the flexibility of the implementation and running the system, but also bring the flexibility from composable banking capability. We see this as a unique proposition that LTI Mindtree Syncodis bring to the table because of our banking consulting capability, but also the deep product knowledge of core banking vendors like Temenos in this case, to put it together. We are good at what we do in system integrator role, whether it's Newgen solutions and other service providers, and we are able to work as a one-stop shop to put the solution together and implement it for our customers. End of the day, what is important is customers to have the flexibility of composable banking, but not lose the flexibility and agility to be able to implement it on time and on budget.
Thank you, Hemal. I think that was a definitive guide to how LTI Mindtree Syncodis is aiding in the entire composable banking architecture and the motion of it. So we're moving on to Varun, your take on how Newgen plays a part in this and how this entire partnership works together in synergy.
Thank you, Gunjan, and thank you, Hemal Martin, for good insights about the same. So where I would like to lead today is what is driving this whole need around composable banking, how the future of the banking is looking forward. and where are the key challenges? So we as Newgen, one of the leader supplier of content management, low code platform, communications platform, almost present in 70 plus countries with 200 plus banking clients globally, and a lot along with Temenos clients, banks using Newgen around the core ecosystem. So we speak to a lot of clients every day, and we thought, why not gather some of the questions, what challenges the CIOs or the CXOs today are facing. And what we could capture was that the top challenges what the bankers today are talking about is the limited flexibility in the monolithic or the old architecture, where everything is being done on a single pot, where things are very tightly coupled, and it's quite cumbersome when you want to scale on a particular capability, or you find new fintech which you want to plug in into the architecture. So the flexibility is holding the banks today in transforming their operations. Another key challenge has been that the amount of time and the cost it takes to make those changes within the banking transformation or the architecture. Now that is, I would say, forcing the banks to deviate from their paths or the targets they want to achieve. So they're not able to do that because it's taking maybe too much time to do that, or it's very expensive. Another key challenges is like in the global world today, especially with the millennials around, right? Meeting the personalized need of the customer is becoming a challenge. And again, the monolithic architectures, etc., right, hold the banks today in achieving those personalized goals, what they want to deliver to their different customers at different levels, different categories, at different. Another point which we commonly hear with a lot of our customers is about the broken experiences. What does it mean is that in today's ecosystem within the banks, there are multiple systems, and transitioning information, data, content across multiple systems is broken, which leads to delays, which leads to, I would say, customer dissatisfaction, right? Because of a lot of transition or handoff between different applications in a traditional way. And last but not the least is the evolving customer. The customers are demanding, the customers evolve with their needs, and meeting those in a timely fashion is one of the big challenge. And to deliver in today's world, composable banking is a good architecture, is a good way to deliver those needs, where it gives you the flexibility, like Himal also mentioned, is plug in the key needs, what you want to deliver, choose the best solutions available in the market, and plug them at easily as an ecosystem around the core services or the core banking operations, what you offer, right? Which can cut across, whether you are using a low code like a BPM orchestrator to move the data across multiple systems and offer services around your onboarding experiences or KYC or cards or payments, etc., and delivering a complete omni-channel experience to your end clients. Now, to me, composable also means disposable, where something which is irrelevant now for you, or you don't want to offer anymore, or you found a better solution in the market, it allows even to dispose of those unwanted systems, application, and plug in the best of the breed, where you can deliver more flexibility, more agility to your end clients, which enables you to have a lower TCO, a good speed to market in terms of launching, say, new services, new products, more innovative payment solution, etc., for your end client. You could scale your critical functions to the volumes, to the needs you want to achieve in the market. And as Himal also mentioned, you get lower vendor dependencies, right? So it's not that you have to have one vendor for doing everything or few doing most of the things. You could have as many vendors you want to plug in into this system or the architecture to meet your needs. Okay. Thank you.
Right. Thank you, Varun. And we got audience, if there are any questions, do put it in. We have received one question, and it's quite interesting. I'll just put it out there. You guys are free, whoever wants to take it up. The question is, you see composable banking practice could have avoided the entire this Credit Suisse fiasco.
That's an interesting question. I think Credit Suisse suffered from a different problem to the objectives of composable banking. Essentially, they suffered from a loss of confidence in the bank, which resulted in huge outflows of capital, which ultimately brought the bank to its knees. I don't think composable banking would have really been relevant in that situation. I think composable banking is much more interesting when you're looking at an institution that's maybe less complex than Credit Suisse, and really has specialist needs and that kind of thing. So I don't think so. I'll see if my panelists agree.
Totally agree with you, Martin, and thanks for that. What I would like to add is that though yes, Credit Suisse had a different problem altogether, but we do see globally you might not know the name, but there are banks which often like close down, or they have to pull back their product or service in the market, especially in today's competitive world, right? Maybe we don't get to hear a lot about them, but there are fiascos happening globally because of not right technology support. So I would say with this level of agility, you could save a bank from getting into such situations, definitely.
Thank you, Martin. Thank you, Varun. And I don't see any questions prop up. So thank you, Martin, Hemal, Varun. We really appreciate your time and all the valuable insights you brought to the webinar. We thank our partners in Temenos and LTI Mindtree Syncordis for the support. Do expect an email from us with a copy of the recording to all the attendees. Those who were not able to share the questions today, please feel free to send them over by email. If you are interested to know more, or if you want to see our platform in action, do visit our website or write to us at info@newgensoft.com. That's info@newgensoft.com. Thank you again. Thank you, gentlemen, and have a great rest of the day ahead.
Thanks, guys.
Thank you.
Thank you.